Hello, dear traders, welcome back. I'm back right after 2 weeks. Had some back testing to do, some concepts to work on. Anyways, let's start the forecasting session with the gold market. Apparently, the gold is pushing higher and higher, breaking every high in its way and creating another. It is also feeling the inefficiencies in the form of buy side imbalance, sell side inefficiency, BC. It is a sign that the gold is not slowing down anytime sooner. It will push higher, it will rally up, and it will create another all-time high. Why is that? Because currently at this all-time high level, we are having relative equal highs, which is a sort of invitation to the market to come up and take the liquidity resting above these relative equal highs. So before we move to the lower time frame and dig deeper into the technical analysis factor, I will take you to the court report data. It is as of 27th August 2024. We will only look up into the non-commercial category. Two sections, one is for long contracts, the other is for short contract. The long contracts are more than 300,000 and the short contracts are more than only 48,000. So there is a huge difference. We are having far more long contracts as compared to the short contracts. Now in the change section, this negative sign shows that these 12,221 contracts were changed from the long section, from the long contracts, and they were added into the short contracts. Now in this short section, these positions with the negative sign, 15,413 contracts were changed from the short contracts from the short section and were added into the long contracts. So these both scenarios shows us that the institutional order flow, the hedge funds, the banks are bullish on gold. So why we will try to be bearish on gold? We will also follow in their footsteps. So now I'm moving to the lower time frame, the 4-hour time frame. Let me zoom in. Now guys, look at this. The market dropped and tapped into the inefficiency, touched the 50% level of the gap, which is the consequent encroachment of the gap, and reversed. Okay, the market created these relative equal highs, but now the market is reversing. It is creating an ideology in the minds of the retail traders that this level is a strong resistance point and it will not let the market break this resistance to the upside. So they are entering in the market, they are open their positions with as much leverage as possible. But now what? Let's move to a 1 hour time frame. Let me show you what we are expecting there. Yeah, I know we are having the relative equal highs at the all-time high level, but below we are also having these relative equal lows. So in order to take the relative equal highs, the buy side liquidity, the market will first gather enough power to break that by taking the sell side liquidity resting below these lows. Okay, so where the market is expected to come and from where it is expected to reverse. This is an inversion fair value gap. We can expect the market to tap into this inversion fair value gap and at least consequently encroach this IFVG. We are also having the order blocks in this inversion fair value gap 1, 2. So when the market tap into this fair value gap, we can place our stop loss below the order blocks and we will target the buy side liquidity resting above the highs. Now let's see what's happening in the Euro USD. We will start from the daily time frame. First of all, the market took liquidity from this high, the buy side liquidity. Now the market is approaching to come down to touch the to at least fill this inefficiency in the form of BC, buy side imbalance, sell side inefficiency. Below the BC, below the inefficiency, we are having this order block. So the market can also approach to touch at least this order block and then reverse. Okay, that's how the market, I think, is going to respond. From where the market reverse, also have a look at it. Sorry. This is the inversion fair value gap in the market which was left unrespected. Now it is respected. The market returned from this inversion fair value gap level after taking liquidity from this high. So let's have a look at the code data, what we are having in the euro section. It is as of 27th August 2024. So as I mentioned, we will only look up into the non-commercial category, long and shorts. Look at the long contracts and look at the short contracts. There is a huge difference of almost 100,000 contracts. We are having way more contracts in the long section. And now look into the change section. These 24,000 contracts were added into the long contracts. And these 12,790 contracts were changed from the short section, from the short contracts, and were also added into the long contracts. It is a sign that the market will continue to rally higher. So what we can expect, we will expect the market to touch this order block, fill this fair value gap completely, touch the order block and reverse. And reverse to which extent, to which point, to at least above this high, to take the buy side liquidity resting above the high. This is what I'm expecting from the Euro USD in the coming week or weeks. Now let's move to the cable pound USD. Before having any sort of technical analysis, we will look for the core data, British pound sterling. So it is also as of 27th August 2024. We are looking into non-commercial category, long and shorts. We are having 150,000 contracts in the long category, and we are having 62,000 contracts in the short section. So there is a huge difference, more than double. So now let's move to the change section. These 26,529 contracts were also added into the long section in the last week. So both these scenarios are a sign that the institutional order flow is bullish on the cable. The banks, the hedge funds are bullish on the cable. Now look at the chart, what we are having in the market. Okay. First of all, look at this candlestick. Let me extend it so you can see it. This candlestick is a breaker block. Why? Because it was the last up close candlestick before the down move which broke the lows. This low, this low. So now if the market break this block, break above this high, this candlestick will be considered as a breaker block. Into the breaker block, we are also having these inefficiencies in the form of buy side imbalance, sell side inefficiencies, BCs. So the market can tap into this inefficiency, and then we are having this one too. But I will like the market to respect the breaker block and to fill the inefficiencies in the breaker block and to then rally higher. So to which extent we can expect the market to rally? We can expect the market, there is this inefficiency in the form of CB, sell side imbalance, buy side inefficiency, CB. So that is the level we are anticipating the market to touch. I moved lower into the 4-hour time frame, and to show you there are inefficiency in this time frame too. We are having these relative equal lows at this point. Let me remove the shaded area to show you. These are relative equal lows. Below these relative equal lows, we are having this BC, buy side imbalance, sell side inefficiency. Below the BC, we are having an order block. So this is our point of interest. This is the PD area we are looking for the market to touch, and then we will look into the lower time frames as that of 1 hour, 30 minutes, 15 minutes, 5 minutes time frame to look for the patterns, to look for confirmation, and we will take entry. We will target the buy side resting above this high. Up to which extent? Up to the extent we extended the CB, sell side imbalance, buy side inefficiency, that is having resting, or that is having above the high, the current high. So guys, this was for cable. Now let's move to the AUDUSD. Australian dollar, United States dollar, what we are having and what we anticipate the market in the coming week. Let's move to the 1 day daily time frame. Before we do any technical analysis here, I will love to look at the core data for the Australian dollar. So we are only looking at the non-commercial category. This section is for long and short. So in the Australian dollar, we are having more short contracts than the long contracts. But there is one thing that is not in sign with the long and short contracts. That is the change section. See, these 10,000 contracts were added last week into the long section, long contracts, and these 8,794 contracts were closed from the short contracts and they were added into the long contracts. So it means we are having quite equivalent amount of short and long contracts in the market. So now this is sort of a bit confusion for the traders. Now we will look into the technical analysis to the chart. We are having any visible patterns, signs for the market moving higher or lower. Yes. So what happened? The market took liquidity from these highs and the market went to this fair value gap, CB, sell side imbalance, buy side inefficiency. The market touched it, the market reversed. You can see now the market took liquidity. You will only see liquidity hunt in the AUDUSD pair. The market broke this low. See the wick? It did the damage. The body closed at 0.6495 and the wick came down to the level of 0.6347. So you can see the damage done by the wick. The market took liquidity, the sell side liquidity, and reversed. Now again, the market took liquidity from this high. So now we are not having any clear vision, any clear sign of market moving higher or lower because the market is in a sort of ranging market. It is in a sideways. It is not moving in one direction. The market is ranging between one point and the other, between highs and lows. So these levels, this phase which is shaded in the pink, is quite balanced because the market moved down, touched the low, upward, downward, and then upward. So it is quite a balanced range. We are not having any clear indication of the market moving higher or lower because we also saw the core data, which was also indicating a sort of confusion in the investors, the hedge funds, institutional order flow, and the banks. So I think I'm also not clear about the Australian dollar, and I will not give any sort of analysis or this market where it is headed towards, where it is approaching. Okay, so For the next week, we will prevent this pair, or we will prevent ourselves to take entry in this market. So if you watched the video till the end, if you liked it, kindly subscribe to the channel, give me thumbs up. Till talk to you to the next time. Take care.